Time for Past Picks going back to December 13th of 2016. You liked Bank of America, and it has made you money.
Yeah, it's interesting. You know, many people know we use stop losses on our positions, and very often I come on and a year later, we've been stopped out of one or two of our positions somewhere along the way. And we talked earlier about being in a structural bull market where there's some very clear themes. And really, the themes that are working have worked all year, and volatility has been exceedingly low. And so as a result, a lot of the positions have remained in the portfolio. So Bank of America has been a position we've been talking about for quite some time. I think we're still very early in a revaluation of the U.S. banks. Bank of America trades at 1x book. Book value is growing, so you could get an expansion of the multiple of book value. Book value means if you sold off all the assets, all the loans to cash, you get all your money back if it's 1x book. You're not paying anything for the franchise, the growth, the brand value. So I think it's very attractive. Tax reform would be good for Bank of America. It's 85% of its revenues come in the U.S., and U.S. economy is doing very nicely. Consumers in good shape. So their wealth management business is great. I would continue to buy the stock today.
Okay, the next one was Dow DuPont. Didn't make you as much money, but it's still positive.
Yeah, same story here. You have a company that merged and is going to split into three pieces. The underlying metrics of the three different businesses are all generally improving. It's generating lots of cash. Again, I'd continue to buy the stock here.
We've had some people have concerns about the fact that you get these huge companies coming together and they worry about these conglomerates and knowing exactly what's in there. Interesting you say then they're going to split them all off. So does that give you more clarity as an investor then to understand what you're investing in?
Yeah, absolutely. So they're going to take their commodity chemical business, split it out. They put the two together, take all their commodity chemicals, go one direction, take their specialty chemicals and go another, and their agricultural chemicals and products go another. So it's going to make it actually much more clear, but you're going to get synergies in each of those businesses that they put together. So that's irrespective of the fact that the chemical industry right now is doing very well because the economy is getting better and the cost of feedstock, the stuff they use to make the chemicals, is very, very low because of low energy prices. So it's a really good environment to be in the chemical business, and they can add some cost savings along the way too.
Here's an interesting name. Everyone knows it. Microsoft. Look at that return in 1 year. 36% total return. People don't feel this is an old name, but obviously they're doing new things.
Yeah. So first of all, this is a cheap stock. This is a company that has obviously dynamite business relationships. They are the software company to enterprise business, and they are the leader in one of the three leaders in cloud-based computing, which is growing very rapidly. So maybe we'll talk a little more about it later. But again, this is one that can be in the portfolio. It's got a good dividend. It's got good dividend growth. It's not expensive, and again, this could be revalued over a long period of time because the themes moving people to the cloud are only just beginning. This is going to go on for a long time.
Seems like a great lesson, too, for anyone who's a student of business or investing in the fact that these big ships, even though they're hard to turn around, they can change direction. There's Satya Nadella. Before him, people thought maybe Microsoft was yesterday's company, but clearly they're not.
Right. Well, two big changes. Software as a service, subscription-based software, and cloud really are changing this company, and they are the company with the best relationships with enterprises around the world. So once something starts to change like that, it can change over a very long period of time.
All right, fascinating stuff. We're going to be back after this short break. Our number, 1-855-326-6266. We're talking North American large caps, so send us your questions.